You're welcome to Laprizzo World Academy, and in this video you're going to be learning about how to actually trade support and resistance. Now you have learned how to draw support and resistance, but now you have to actually learn how to trade them. How do you now trade support and resistance? How do you trade support and resistance? All right? Okay, I don't draw again. I've drawn my resistance. Look this. All these are my zones. This is where I have drawn my resistance, support and resistance zones. Now remember, the rules about support and resistance is drawing them with higher time frame. I believe now you understand what I mean. I drew all these zones with a higher time frame. All right. Now I have drawn these zones with the higher time frame. Now, how do I now place a trade when price comes to these zones? How do I now place a trade? For you to place a trade now, you have to now go back to higher time frame. You don't want to uh you can trade with higher time frames as well, but now that you have drawn this drone, you can now enter the trade with lower time frames so you can catch the market early. So let me use 4 hours time frame for instance. I want to enter this market now. Let's say I am watching this market. This is April 16, 2021. I don't know when you're watching this video, but now that price is here, what signal, what do I need to see before I'll be in this trade? Okay, this is a resistance zone. So based on the past history, based on what price has done in the past, you want to know how now that price is here, what am I supposed to do here? The first thing you want to know is to look at the movement of the market, how it was going. Is it a strong force? But two things are going to happen. Is it that price turn from here? All right. Is it that price turn from here or price breakthrough here? I'm going to show you in this video on how to trade it. It is called retest, the retest principle. Now, if you are seeing the candlestick, watch the candlestick formation, how they are moving. Are they very strong? Are they very strong or they are very weak? Like now, this play, it was strong. It was getting weaker, weaker, weaker until it got here. It struggled. It's struggling here. Now, how will you now know that price is going to turn from here? Because of what it has done in the past. You want to use, this is where candlestick formations are very, very important. So one of the best candlestick formation I like to use is called doji. I mean, you can use doji, but let me start with pin bars or hammer. Let me show you on the slide. Now, if you see this kind of candlestick here, it doesn't mean whether it is red or green. But if you see something like this, long wick on a zone. Remember when I was talking about candlestick formations? I told you the importance of seeing those candlesticks on a zone. If you see them on a zone, yeah, let me increase, put my bold distance. Now that you are on a zone, this place, if you see these candlesticks on this zone, it is an indication that price may likely turn from here. So after, if you are using 2 hours, it doesn't matter the time frame you're using, but whichever time frame you are using, the best thing is to come back to maybe 1 hour or 2 hours, lower time frame. Sometimes I use 4 hours too to enter, so that in case you enter with small time frame, the movement you enter the market first before somebody who is using daily time frame will come in. So going back to smaller time frame for your entry is a very good strategy to use. Now that you have discovered this turning point, once price approach this zone, at least come back to 1 hour and do your entry. Now, if you look at this candlestick very well, look at what happened. Once price touched this place, it came down. Look at how most people trade. You can sell here. You can sell here after this one closes. This is what they call pin bar. Or you want to, it doesn't matter the name you're calling it, but let me show you the candlestick. This candlestick now, that is it. The best ones you will see in the market is it should be long, small body, but long tail. This is, let me show you. or this is your buy signal. This candlestick is your sell signal rather. This candlestick allow, if it is 1 hour, it is 2 hours, it doesn't really matter, but this is your sell signal. You want to place your sell here. You want to place your sell here. You can use pending order. If you want to use pending order, you already know what pending order is. You come here, you can say, okay, I want to use a pending order. I like to use pending orders. You come here. What you need to do is just to type. Now, if you want to use pending order, you're going to use 1.19 to 1.19740. That is, you tell the price, you do what they call sell stop. You do what is called sell stop. That is number one entry. Is you see a candlestick like this, then you enter the trade. You can do instant execution, but me, I like pending order. So in case it didn't come down immediately, you will not be in the trade. So you can't put your stop loss above a candlestick. Your profit now will not be in the next zone. Based on 1 hour time frame, we can say our next zone is here. Our next zone is here. Because we have seen that this place is, though it's a minus zone, but if we use our pip to calculate this thing, all right, we use our pip to calculate it, it's about, though it's a minus zone, but look at where your next take profit should be. This place. This may be your first take profit 1, then take profit 2 should be here. But this is a minus, it's a zone. Look at it here. It held the market there. It had held the market here again. So this is your entry. There are 2 types of entry. One is to allow the price to just come here, and then once it gives you something like this, or this bearish engulfing. This is where all these candlesticks comes to play. This is where you need to understand the need for you to know the meaning of these candlesticks. The need for you to know these candlesticks. Yeah. Once you see this kind of bearish engulfing on the zones you have drawn, all right, look at this again. This is bearish engulfing. Bearish engulfing means that this one completely engulfed this small one. So you can also do sell stop here. You can do sell stop here. Once you do your sell stop 1.19694, you can now put your stop loss above this zone. Don't put it too tight, but you can put it above. Right? So your profit can be here or this first zone. If you don't want to do sell stop, you can do instant execution, meaning you just want to place the trade now. But I like to use pending orders. Remember one thing when you are trading these zones with this candles information. This is rule number 1. Rule number 2, you want a retouch, a retest. Retest meaning that price comes here, though it shows you a candlestick formation, but you are not selling yet. Look at our price. The price came back here again for a retest. Right? After this retest, this is when you want to jump in. This is what some persons like to do. I also like retest. Once price touches the zone, most time I allow you to wait first. Sometimes it could just touch a zone and behave as if it wants to go down, and it will just go straight up and break through that zone. But for you to have a very valid support or resistance trading, allow you to do a retest. That is another one. That one is more conservative. But trading it like this is aggressive. Both of them pays. Anyone that is good for you is up to you. With proper risk management that you have learned from this academy, you are going to make your trading decision. If you want to wait for a retest, you want price to come here, but you say, I am not trading yet. I don't trust this thing yet. Let it go back for a retest. Look at what it did. It came back here for a retest. This is the second time you cannot trade. Look at that. You could have made nice profit on this zone. It has come back to retest again, the zone. That is rule number 1. So you use candlestick pattern like this. You can even use things like doji. This is where the doji candlestick, all those candlesticks we talk about came on board. This is doji. This is also a valid sell for you. If you see this on that zone, you can use them. Let's look for doji. Like something like this now is doji. Look at it. This is doji. If you see something like this on this resistance zone, all right, it's a signal that the market may likely turn from there. So you want to wait for a retest, or aggressively you just want to place a trade, but always like look at it now. This kind of pin bar. This is also called in the candlestick formation that will land. This candlestick is called gravestone. Look at it. This is where you see gravestone. It's in, that's why it is good for you to master these candlesticks. So if you see them, you know them. This is gravestone, long tail, but very small, tiny body. If this is formed here, you want to take advantage of this. You see it here on this zone. Like here is a zone, is also a sell signal. Note, note one thing. For a highly probability trade setup, look at your left. Whenever it doesn't matter if you're like now you're using 4 hours time frame. When you see a candlestick formation form like this, look at price. For a better trade setup, ensure that there is no much candlestick, plenty price action in the recent past year. What do I mean? If you are trading a zone, it's for you to have massive returns. I mean, a good trade setup. It shouldn't have plenty recent price action. When you see so many recent price action here, it means that price could break through this zone. Do you understand? We are going to learn about trading the breakout. So now, when you are trading, ensure it is better that you don't have much price action. Let me give you an example what I mean. Like here, there is so many price action. All this one, there is so many recent price action. Ensure that at least the place is free. Like here, like this one now. Look at this one. This one is bearish engulfing. When you see something like this on a zone, this is when you want to place your sell. This one does not have much price action. It means that all year is about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. There is no much price action. Price has not touched here for a while, at least for according to this time frame. This one is valid. Look at this again. Look at this again. This is also a valid sell. This is doji. There is no recent price action. It means that price has not been on this zone for some time. This was it touched. This was March 21, March 11 March 2021. All right. Now price touched here last. Price has not touched here for a while since it broke through this zone. It broke through fourth March. It has not touched here for a while. You see room. You call it room to the left. There is room to the left. Look at the room. There is enough space. Price has not been here for at least for some time, for days. Price has not seen this place. So this one will give you more probability trade setup than when you just come here and you see plenty touches, plenty price action, plenty movement on that particular zone. Like this one now. This one now, so many price has been on this place for a very long time. It's been so many hours that have been here. So it's suspicious that price could break through this zone. It's very suspicious that price will break through. Now, once price get to this place, if in case price break through this, if you place your trade now with a good candlestick formation like a pin bar, doji, engulfing, bearish engulfing, all those candlestick patterns I have taught you in this academy, if in case price don't respect this, because sometimes it could be broken, but let me show you what happens. If price break through your zone, let's say price break through this zone like this, all right, price do this, don't buy. This is where I'm sure they do. I'm sure want to buy here. But professional want to allow this price to come back to do a retest here. Once price come here to do a retest, that is when you want to look for a trade setup. This could be fake out. It could just fake you out, then boom, all the way down. So for you to avoid this fake out, if price break through your zone, this resistance zone now, right now I'm looking at this market. I've made my profit. I took my profit here yesterday. Now I am not doing anything. I'm looking for this market to break through this zone. Once it breaks through this zone, I am not doing any sell too because of this recent price action. I'm waiting for what will happen. Now, if price break through this zone, you want it to come back and test here. If it tests here and then does something like this again, like this, let me change this to a green candlestick. This could be if price come back to test here and do something like this, that is when I would like to buy this. I may put a buy stop, put my take profit here, and then look at the next zone to take my profit. Put my stop loss rather down here, and I take my profit in the next zone. Or price gives me, this is engulfing, or price gives me like something like this again. Maybe price gives me something like this. If it gives me something like this, I am going to buy that market. And then it also give me something like this as well. These two candlesticks, any of them, I'm also going to buy. I'm also going to buy. So you don't buy just because price has broken through a zone. You want to wait for a price to come back, for the price to come back and retest that zone. That is when you want to place your buy. So that is it. So let's look for another example. Let's look for a support, how to buy when it is on support zone. Support, that is for resistance. You can sell, that is for resistance. Let me go out to look for my CAD card. Let me look for CAD, JPY, CAD, Canadian Japanese yen. Let's check out for Canadian Japanese yen. Let's look for buying opportunities. This is trading the support and resistance. Now that you have drawn these zones here, okay, let me show you an opportunity. Remember that after drawing with all this daily, weekly, you want to come back to lower time frame like 4 hours, 2 hours, 1 hour for your entry. Some even use 30 minutes to enter, but for me, I like 4 hours and 1 hour to do my entry. It means I'll be using this time frames to analyze the market. Look at it again here. Look at bearish engulfing because this is a zone. After this candlestick formation, this is when you want to sell because this candlestick has completely engulfed this one. So this is a selling opportunity for you. This is also an opportunity for you. If you had waited for this to come back for a retest, look at the second opportunity. This is aggressive. You can sell here, put your stop loss above here, stop loss above. Don't put it above the recent high. Your stop loss should be above the recent high. All right. Now, once your stop loss is above here, you can aggressively you can take this trade. After allow these 4 hours to close. Not any candles, any count time frame you are using to analyze this market. Ensure that you allow it to finish closing. So you would have taken this trade after the closure of the candlestick, or you wait for a retest. Look at the retest. Market always come back to retest the zone. Look at another nice entry. After this retest candlestick, this one, this red one now, you would have taken your sell. You would have taken your sell. It's a nice entry. A very nice entry. You can aggressively enter here or conservatively enter with this second retest. Then look at how many pips you have made. Let's calculate how many pips price movement. Look at almost 170 pips. So this is for a sell. Now let's look at for a buy. For a buy, look at this is a support area. This is nice bullish engulfing. This is a support area. So once you have, let's say you are expecting the price to be coming down, aggressively, you can do one thing. You can do sell limit. Even this place, aggressively, if you want to be an aggressive trader, that is when sell limit, buy limit, all those things comes to play. If you want to be an aggressive trader, what they do is that once they have discovered a strong zone, remember all these places you have not seen what is happening. When price was on this way to this place, aggressive trader will just put sell limit. Remember, sell limit is placing an order above the current price and expect the price to come hit, and then it goes down. So aggressive traders will just put a sell limit order here. They will just put it here, not on this line. Gong, gong, gong. No, it doesn't work like that. They will just put it below. Sometimes it may not even touch the zone again. It will return. They will put it here, and then they will go and sleep. Put their stop loss above. Put their because you may not know when price will come. If you don't have the time to watching a chart, that is an aggressive way of entry, because you have discovered in the past that these places are strong support or resistance zones. So you just place a trade. It's very aggressive, but with proper risk management, you can make money from this one. You make more money this than waiting for all this finish formation to end. When you are aggressive like that, you make more profit. Your risk is very low because look at your stop loss very close to your entry point. That is another way of entering. You put your sell limit here, then go and sleep or go to your work, do anything you want to do with your time. Once price reaches the highest it can help you to hit your stop loss. But for conservative traders, they want all these candlestick formation. They want a number one, and another aggressive is trade after this first touch with a nice convincing candlestick formation. Could be a doji, morning, evening star, like for a sell evening star. It could be bearish engulfing, anything pin bar. You can trade these things. But another conservative way is after the first touch, allow it to come back for a second retouch. It retests. Once it retests for the second time, that's when you want to be in the trade and it will give you nice profit. Okay, let's also go back to the support. Now, this is a support area. You have used your time frame. Let's go back to daily time frame. Oh, this chart can be funny sometimes. Okay, just leave this in here. I see ADJPY. Whenever you see all these kind of funny things, you just go and open another page. Okay, we are doing 4-hour time frame, right? Okay, all right. So this is for a support. You have seen that this place is a zone. Now, this is a confirmation, though not too much engulfing, but something like this is a confirmation candlestick, bullish confirmation candlestick. So let's go and look for more confirmation trading. Let me use daily to see these zones clearly. You have to use your daily to confirm these strong zones. Higher time frame, it could be daily, It could be uh, weekly, but higher time frames to confirm these zones. First, this is like starting afresh. Let me see whether this our chart will come up again. Okay, it's up now. I think it's better. Let's work with the chart we're already using, because you don't want to be drawing this line every minute. You have to draw it once and work with it. Now, if you are using a weekly time frame to analyze the market weekly, sometimes you may be using weekly to draw your zones. You can even enter with weekly sometimes, because maybe last week price, like this is weekly candlestick now. Last week price was here. You didn't buy any, you didn't see any buying opportunity, but the following week you see something like this, you are going to buy that market. This is a confirmation candlestick. You buy. Why? Because it's on a zone. Remember to buy always on a zone. If the price is not on a zone, you are not buying or selling. That is it. You are only buying when price is on a zone. Like this one now. Like this one now is a confirmation candlestick, is bullish engulfing. It's bullish engulfing. Let me see all these zones. All these are zones, right? I will lock it. So let's look for trade setup here. Let's look for trade setup. Okay. Lock them. This is also a confirmation candlestick, but look out for room to the left. Let it have much few of these candlesticks. It is better when you have few candlesticks on the left. It gives you a more high probability trade setup. This is also a bullish engulfing, like this is a bullish engulfing candlestick. This, if you see this on the zone, like this one now, is a trade setup. You can put a stop loss there. Look how it came down, but it didn't break, it didn't touch a stop loss. That is why retest policy is good. Imagine you had placed this trade because of this candlestick now. Put your stop loss down here. Maybe you must have placed the trade above this place now. If price comes back for a retest, if you have placed this trade now after this candlestick now, if price is coming back again, you may be scared. It may hit my stop loss, or some people may even close their trade. But when you allow the retest to happen, the second movement, you just go fiam. You are not scared that time, because it has already done what it is supposed to do for doing retest. So when you allow the retest to happen, you have more mind to relax. But sometimes if you don't, it could also leave you and go. It will not even retest. So it's up to you to make a decision to whether trade retest or not. Anyone you like to trade is up to you, is your personality. If that is what is good for you, if you're aggressive, you trade one time and you go. This is also a zone. This is also a zone. And this is also another candlestick formation. This is pin bar. It also is a buy signal. But look at what happened. It also came back for a retest before going up again. So you may trade this one, but sometimes it could come back. Now, if price was coming out from here, if you want to be aggressive also for a buy, you can put a buy limit if it was coming down, because you know that in the past it has always done that. Like here now, maybe when price was coming out from here, you can put a buy limit order without allowing this formation to happen. You just put a buy limit order, and then once price touches this zone, it will just trigger your buy, and you'll be in the trade and take your profit. So this is how you can trade it. These candlestick formations I have used. You can come back to draw your zones with higher time frame, but go for an early entry. Use a smaller time frame now to be monitoring the market. This is This is 2 hours. I also like 2 hours to be monitoring my market. This is 2 hours. You want to monitor this market with a time frame that can make you have an early entry. Why? Because if you are using daily to enter this market now, your stop loss will be very large. Let's say, let me give you an example to illustrate my point. Let's say you are supposed to enter this trade with this candlestick formation. This one is a bit big candlestick. This one now, let's say you want to place your buy here. Let me roll this thing now. This is 2 hours candles. This is let me delete it. All right. Let's say this is the candlestick you want to use. This tool can be funny sometime. Okay, let's say this is the candlestick you want to use for entry. Now, if you are entering from here, let me also go back to daily. This was March 21st, right? Okay, let me go back to daily to see whether this candles can be. Where was the place we drew that time? Okay, let me use this one as an example. Let me use this one. This one is more obvious. This was this was this was this was this was November 9th, 2020 candlestick. Let's say you were waiting for this candlestick to form. If you are using daily time frame, you were waiting for this to form, and at that time you have to allow that day to close before you place this buy. All right. Okay, this is too big. Let me not use this. Let me not use it. Let me use this second one. Let me use this one to do this illustration. Let's say here you're waiting for this candlestick to form. All right. This first one. So after this first one, if you are using daily time frame, you have analyzed the market, you have drawn your zone, and price has touched here. This is a confirmation candlestick for you to place a buy. This is a buy signal. All right. Once you place a buy after this candlestick closes, your stop loss is going to be here. Your stop loss is going to be below this zone. Below this zone. But remember, 2% is what you're risking. You're going to calculate the risk. First, watch the video on risk management. You bring it a little bit down because of all these things it has done in the past. Now, let's say your stop loss is here, and this is you're going to place your trade after here. Let's say your trade will place here. Your trade will place here. because you have to allow that day to close to confirm if it's going to show you pin bar or bearish or whatever candlestick you want to use to trade your market. Okay, let's say that is where you want to place your trade. This is the confirmation candlestick. After this formation of this candlestick, price move all the way up. Now the advantage of going to enter with a smaller time frame is this. If this was your entry point, 20th November, if you go back to 4 hours, let's go back to 4 hours. 20th November 2020. Let's go back. Okay, this is the area. This is the area. This was this day. This all these candles happened on the 20th. All these are 20th November. Okay, all these are 20th November candlestick. Remember that was daily candlestick. Now look at your entry point. Your entry point was here, and look at the measurement of the pip here, down here. It's about 90 something pips. So if you were using a smaller time frame to do your entry, you would have entered this market with. Let me look at the better one to enter. Let me remove this. Okay, if you were using a smaller time frame, you would have entered this market with this on that particular day. You would have entered this market with this. This would have been your entry. This would have been your entry. This is 4 hours time frame. You would have entered with, because this is also engulfing. This one completely engulfed this one. It's an engulfing candlestick. You wouldn't have allowed all this one. You wouldn't have missed these things. If you enter here now, your stop loss will be here. Your stop loss will just be stop loss. Remember, it's when price go against you. Your stop loss would have been from here. All right, from here. Let's see. Enter here. Stop loss about 34 pips. Let me say 39 pips stop loss. 39 pips stop loss. Against when you are using the daily time frame to enter. If you use daily time frame, which was here, because that was when the day formed. If you had entered from here, let me calculate your risk. You see, that is about 103, 105 pips difference. So your risk becomes higher than when you enter with a smaller time frame. So even if you go further, a little bit further to 1 hour, let me draw this thing. You can see that your risk becomes even smaller. So the best thing is to analyze this market with higher time frames. Then for an early entry, you want to use for an early entry to minimize your risk and maximize the profit. You want to use a lower time frame, but don't go below 1 hour. I'm just my own personal opinion. Some people use 30 minutes, even 15 minutes to enter, but in my own opinion, I like to enter with at least 1 hour. Let's go back to that place again. At least 1 hour. So let's let's since this chat is giving us problem. So I believe you have understood what I just explained so far. It's good for you to enter early so that your risk will be minimized and your profit will be maximized. You will minimize your profit and have more profits. You will minimize your losses rather and then maximize your profit. So use the higher time frame to enter your market, to analyze the market, then come to these zones, use all these candlestick formations to enter your trade, give you a signal. You've seen, I've shown the pin bar, all those candlestick formations you have learned, all of them, they are valid, but it must be on these support and resistance zones that you have actually dropped with your smart, with your computer or your phone. I hope this video is a very long video. You have to watch it over and over so you understand how to trade this market. With proper risk management, remember 2% of your account or 3% maximum. You can do your calculations with watch the video on risk management. Once you do your calculations, trading becomes very, very easy. I hear people say, I lost all my money in trading because of this knowledge is not there. Once you have this knowledge, winning is very guaranteed in trading. So I hope to see you. I want you to watch this video again over and over, understand it very well, and I will see you in the next training. Thank you.